Hey all, welcome to ShareTreck. This is Raj here. This is the second episode of our series on technical analysis. And today we are going to talk about resistance and support. Today we are going to talk about some trends. And I'm going to explain to you the whole thing in a very simple manner. Let's get started. Welcome back, friends. Yesterday we saw what a price chart is and how a candle relates to a price chart. How by looking at a price chart candle, you can say what was the opening and the closing price and whether it was a bullish day or a bearish day. And today we are going to take it a step further. We're going to talk about patterns of these candles and what they mean to us. We're going to give them names. We're going to talk about resistance and support. Let me start off by taking you to the price chart and give you a visual example, and then I'll explain it to you in simple terms, in real life terms. So here we are in this price chart. I have taken the price chart of Meta, and what I want to show you here is that the candle that we saw yesterday, we just examined a single candle. We said this is the bullish candle because it is green, which means that the price opened lower during the day and closed higher. And this is a bearish candle, which means the price opened higher in the given day and closed lower in the given day. And today we are going to look at how these candles relate to each other. Now, there is a sequence of these candles. Each candle is for a duration of 1 day. That's how I have set up this chart. And I'm going to look and see if I can find a pattern here. You also think about this while I'm doing this. How do these candles relate to each other? One of the things I can see is that the first candle is lower than the later candles. So which means there's a bias for going upwards. So when the price goes upwards, that means we are in a bullish situation. So what I'm going to do is I'm going to take a trend line and I'm going to try and connect all the bottom candles and put a line out there. Now this is my line of support because in the past, at least twice, it has showed that the price cannot fall below this line. So drawing this line enables me to establish a potential support line. This could change in future. Now this is ascending upwards, so the price is going upwards. So this is a bullish support line. Similarly, I can take another trend line and I can try to connect all the tops of the candles that we have here, and I'm going to mark this red because this is resistance. This is preventing the candle from going above. So it's performing the role of a resistance. And together they form a channel. In the channel, the green line of support prevents the price from dropping down below it. And the red line of resistance on the top prevents the price from going above it. And the price, which is expressed in form of bar candles, keeps on oscillating between these two for a period of time until it breaks through either on the upside or the downside. So this channel I would call as a bull channel because it is moving upwards. Now we could have a bear channel as well. So for example, I'm going to show you a bear channel. Now if I was to connect all the bottoms of the candle out here, this is a line of support out here, and this is a support channel. And likewise, I could draw a trend line which I can use here to connect the tops of all the candles that we have out here, and I'll mark this as red. So this is a bear channel and all the price was oscillating in between here. So we can have bullish channels and we can have bearish channels. Now I want to show you another way in which you can have support and resistance. Out here, this green line was the support, the red line was the resistance. This is the universal symbol. Now I have a green line out here. Now what is this green line all about? This green line is a support. And why is it a support? Because the price is above it. And if the price falls below it, I'll color this red and it will become a line of resistance. Now I have taken the chart of another popular stock, Nvidia, and you see a whole series of green lines out here. I've drawn these green lines to show support and resistance. For example, if you look at this green line out here, this is a line of support because the price went above this and could not come back down again. So I have a touch point here from below, I have a touch point here from above, and I have another touch point here from above. Now look at these two sets of lines. This is a line of resistance if the price was below it, and this is the line of support assuming price is above it. So the price moved within this area for a period of time, and this pattern is called as consolidation. So this is how we are looking at resistance and support. If the price falls below a line of support, then that line of support becomes resistance. For example, if the price was to fall down here, then this line would become a line of resistance. And we have examples of that from previous charts. For example, this is the support line of Apple, which got converted into a resistance because the price has fallen down. For example, this is the latest support price that is going to get turned into a resistance because the Apple price is below. Now here I have to turn this into a resistance. So this is how we try to understand the chart, price chart, and this is how we use the candles and their wicks in order to create chart patterns. And we find that it is useful to get a general idea of the sense of direction where the price is going. Well, let's do a quick recap of what we learned. We learned that the candles which express the price for a given day keep on stacking up and move rightwards. As the time passes by, with every subsequent day, a new candle is added, and the new candle could be above or below the price of the previous candle. Now, when you have a series of candles where the price keeps on going up, we call it a bullish trend. And if you were to draw a line connecting the bottom of the lowest candles, that becomes a line of support. And if you connect the line, a line that connects the top of the candles, it becomes a line of resistance. The resistance line has the job of preventing the price from going above it, and the support line has the job of preventing the price from going below it. And when you are bounding the price by a line of support and a line of resistance, you form a channel. And if the channel shows prices going up, it's a bullish channel. If the channel shows prices going down, it's a bearish channel. You can look at this whole support and resistance concept as giving an indication of which direction the price is likely to move, because supports will always bounce back the price when the price touches it, and resistance will always push down the price when the price touches it, except in cases where the volume is low. We saw the histogram at the bottom of the chart which shows the volume. So if the volumes are high, then there's a higher conviction in the price, and there's a greater chance of the price breaching either support or resistance. If the volumes are low, then the price conviction is not that high, and the chances of breaching the support or resistance is lower. So this is the way I understand the price charts, and that's what I would like to explain to you. You can always skip backwards and have a look at various portions of the video if you did not understand a particular concept. And if you have missed the first episode, please check it out in the playlist, and I'll be labeling each of these episodes with episode numbers to make it easy for you. With that, I would like to end this video. I hope you enjoyed this, and if you have friends who want to learn technical analysis, be sure to recommend them to watch these videos. Thanks and have a great day. Bye for now.